Picture this moment. You wake up to find your trading account has grown overnight while you slept peacefully. The positions you carefully selected are moving in your favor. Your risk management strategy is protecting your capital. This isn't luck or wishful thinking. This is what happens when you master the fundamental principles that separate successful traders from the 90% who lose money. Today we explore 25 transformative lessons that can reshape not just how you trade, but how you think as a trader. These principles come from real-world experience, drawn from the habits, mistakes, and breakthroughs of consistently profitable traders. Every lesson we discuss has been tested in the fire of market volatility and proven to work over time. The journey ahead will challenge some beliefs you might hold about trading. It will reveal why most traders struggle and how the successful minority approaches the markets differently. By the time we finish, you will have a completely new perspective on what it takes to succeed in trading. Let me start with the most important question. Why do most traders fail while only 10% succeed consistently? The answer might surprise you. It has nothing to do with lack of tools or strategies. The difference lies in understanding how to think like a professional trader. Successful traders have learned something crucial. They understand that trading is not just about making money. It involves mastering yourself, reading market behavior, and making decisions with complete clarity and confidence. They have embraced rules that govern not just market movements, but the trader's mindset itself. These professionals have developed the ability to manage emotions effectively. They maintain discipline even during chaos. Most importantly, they know how to survive when markets become unpredictable. Let's begin our exploration with the first and most critical principle of all. Never try to control the market. Instead, focus on controlling your reaction to what happens. Most new traders fall into a dangerous trap. They believe they can outsmart the market through analysis. They search endlessly for that perfect signal or magical indicator that will guarantee success. They convince themselves there must be a secret that allows them to beat the system consistently. The market operates by its own rules. It moves according to forces beyond your control, regardless of your hopes, predictions, or technical analysis. What separates professional traders from everyone else is not their ability to predict future movements. Their edge comes from their ability to respond appropriately to whatever happens. Great traders never waste energy trying to control market direction. They focus entirely on controlling themselves. They manage their emotions carefully. They control their reactions to winning and losing trades. They make decisions based on predetermined rules rather than impulse. This approach requires a simple, structured system that they follow without hesitation or second-guessing. Trading success comes not from predicting every market move. Success comes from preparing thoroughly for any possibility and staying calm when unexpected events occur. This mindset shift changes everything about how you approach the markets. Now let's examine one of the biggest misconceptions that destroys trading accounts. Many people believe that more trades automatically lead to more profits. New traders often embrace this flawed thinking. When markets open and charts start moving, they see red and green candles flashing everywhere. The excitement builds quickly. The urge to act becomes almost irresistible. Here lies a fundamental truth about trading. Trading more frequently does not mean earning more money. In fact, excessive trading often leads directly to significant losses. This brings us to our second critical lesson. Overtrading can completely destroy your account over time. When you trade too frequently, you increase your exposure to unnecessary risk. Every single trade carries potential for loss. When you keep entering positions without high-quality setups, you slowly drain your account through small cuts. Trade after trade, the damage accumulates until major problems develop. Successful traders are definitely not the busiest traders in the market. They wait patiently for their trading system to align perfectly. They wait for their edge to appear clearly. They wait until risk can be properly justified. If conditions are not optimal, they simply do not trade. They resist the urge to chase market movements. Instead, they allow the market to come to them on their terms. Remember this important concept. Not trading is also a valid position. Sometimes, stepping aside represents the smartest decision you can make. This understanding leads us to a lesson that separates emotional traders from true professionals. You must learn to accept small losses while avoiding large ones at all costs. In trading, losses are not optional or avoidable. They represent an inevitable part of the business. No trader wins every single trade, not even the legendary figures of Wall Street. The crucial question becomes whether you can accept a loss when it remains small, or will you wait until it becomes truly dangerous. Successful traders have mastered the art of cutting losses early. When a trade moves against them, they do not hesitate or hope for a reversal. They exit the position immediately, move on to the next opportunity, and protect their remaining capital. Many traders fall into a destructive emotional trap instead. They hold on to losing positions, hoping desperately that markets will turn in their favor. They even add more money to losing positions, trying to average down their cost basis. When they finally exit, it happens only after suffering a large and painful loss. Even worse is the dangerous mindset of revenge trading. After experiencing one loss, some traders immediately jump into another trade just to recover what they lost previously. This approach leads to emotional chaos and massive account drawdowns that can destroy years of progress. The solution appears simple but proves powerful in practice. Always use a stop-loss order. Respect that stop-loss without exception. Most importantly, understand that a small loss does not represent failure. Small losses are simply part of the trading business. What matters most is staying in the game long enough to profit from your edge. Let's discuss one of the strongest emotions that appears when you start winning consistently. Greed can be subtle at first. You find yourself in a profitable trade. Price moves steadily in your favor. Your predetermined target approaches. But then a voice whispers in your mind, suggesting you hold a little longer. Maybe more profit awaits if you just stay patient. You ignore your original plan. You delay your planned exit. Just like that, market sentiment shifts. The profit you had disappears completely. This scenario brings us to one of the most important psychological lessons in trading. You must learn to control greed before it controls you. Greed proves dangerous because it makes you overstay profitable positions. It clouds your judgment completely. It transforms winning trades into losing ones, not because of market action, but because you did not know when to stop taking what the market offered. Every professional trader operates with predefined profit targets. When price reaches those levels, they do not hesitate or second guess. They exit without emotion, knowing that consistent exit strategies build long-term success. They never try to squeeze every last pip from market movements. They take what the market gives willingly and move on to the next opportunity. In trading, more is not always better. Knowing when you have enough proves more powerful than always wanting more. This understanding connects directly to perhaps the most important rule that ties everything together. Discipline represents your greatest weapon in this business. You can possess the best trading system in the world, but without discipline, it means absolutely nothing. Discipline means showing up every single day and sticking to your predetermined plan, especially when you feel tempted to break your own rules. Discipline means not chasing trades out of boredom or impatience. It means not over-leveraging your account because you have strong feelings about a particular setup. It means not holding on to losing positions just because you feel hopeful about a reversal. Discipline keeps you grounded when emotions try to take complete control of your decisions. Look closely at the most successful traders you can find. They are not always the smartest people in the room. They are not necessarily the fastest at making decisions, but they are absolutely the most consistent in following their processes. They treat trading like a serious business, never like a game or entertainment. They execute their proven strategies like clockwork, regardless of how they feel on any particular day. Discipline protects your capital when everything else fails. Discipline builds trust in your own trading process over time. Ultimately, discipline separates winners from dreamers who never achieve their goals. If you want to succeed in this challenging game, start by working on your mindset. The charts and analysis can wait until you develop proper mental discipline. Imagine walking into a battlefield with no strategy, no clear direction, only hope. keeping you moving forward. That scenario describes exactly what trading without a plan looks like in practice. Many new traders open their trading platforms, see a candle forming on their charts, and impulsively click buy or sell buttons. They have no logical reason, no tested strategy, just a gut feeling guiding their decisions. Gut feelings in trading environments prove extremely dangerous. This reality leads us to one of the most foundational truths in this entire journey. You must always trade with a well-defined plan. Every trade you take should have a clear and logical reason behind it. You need a well-defined setup that you have tested previously. You need an entry point you trust completely. You need a stop-loss level you respect absolutely. You need a profit target you are willing to walk away with when reached. Before you click that buy or sell button, ask yourself these crucial questions. Why am I entering this particular trade right now? Where will I exit if the trade goes against me? Where will I take profits if the trade moves in my favor? If you cannot answer those questions with complete clarity, you should not be in that trade. Trading without a plan resembles sailing in a storm without a compass. You are not in control of your destination. The market controls everything, and sooner or later, it will shake you out of your positions at the worst possible times. This understanding brings us to a closely connected mindset shift that proves equally important. Never challenge the market or argue with price action. Here lies something you must truly accept deep in your core. The market is always right, regardless of your personal opinions. Many traders fall into the trap of thinking they know better than market price action. They observe a move and declare that it makes no sense. They insist that price has to come back to more reasonable levels. So they hold their losing positions, waiting and hoping and resisting obvious reality. The market does not care about your personal opinions. It does not care about your predictions, your favorite indicators, or how confident you feel about any particular trade. If the market moves against your position, your opinion becomes completely irrelevant. What matters is how quickly you can respond to changing conditions. Never assume the market will eventually come back to prove you were right all along. That kind of thinking leads directly to large losses and sometimes even completely blown accounts. Smart traders never argue with chart patterns or price action. They do not take losses personally or as attacks on their intelligence. They adjust their positions, exit when necessary, reset their mindset, and prepare for the next high-probability opportunity. The sooner you stop fighting market movements, the sooner you will start flowing with natural market rhythms. Success in trading is not about being right more often than you are wrong. Success comes from being aligned with your trading plan, maintaining proper mindset, and moving in harmony with market rhythm. When most people enter the trading world, they are drawn by one primary motivation. Money represents their main focus. They imagine quick profits and big wins. They might even dream of quitting their day jobs to live the trader lifestyle. While ambition is not inherently wrong, every successful trader learns one truth the hard way. If you chase money directly, you will lose it quickly. If you chase skill development instead, money will follow naturally over time. This insight leads us to a powerful shift in mindset that changes everything. Focus your attention on learning rather than earning immediate profits. New traders often measure their progress purely by profit and loss statements. If they make money, they assume they are doing well. If they lose money, they become discouraged and question everything. The best traders view every single trade, whether winning or losing, as valuable feedback about their process. They focus on getting better rather than getting richer quickly. They read extensively about markets. They study price behavior carefully. They review their past trades systematically. They journal their emotions and decision-making processes. They treat every trading day as a classroom where the market serves as their teacher. Over time, this commitment to continuous growth transforms into genuine confidence, mental clarity, and consistent performance. Ask yourself honestly, am I learning from every trade I take, or am I just gambling and hoping for lucky outcomes? If you put learning first, profits will naturally result from your improved process. Learning represents just one side of the success equation. The other side involves patience, a skill that most traders seriously underestimate. The market rewards those who wait patiently. not those who rush into mediocre setups. The market rewards traders who observe carefully, prepare thoroughly, and strike only when conditions align perfectly with their strategy. Many new traders feel constant pressure to be in the market at all times. They fear missing out on potential opportunities. They feel like if they are not actively trading, they are somehow falling behind other traders. Here lies an important truth that changes everything. Not trading also represents a powerful and intelligent decision. Sometimes the best action you can take is sitting on your hands, waiting patiently, and watching market conditions develop. The right high-probability setup will eventually appear. The optimal opportunity will show itself clearly. When that moment arrives, you will be ready to act decisively. But if you jump into trades too early, just because you feel bored or impatient, you will find yourself in poor-quality trades with predictably poor outcomes. Remember that patience is not weakness disguised as inaction. Patience represents strength and discipline working together. In trading, patience often makes the difference between merely surviving and actually thriving. In the world of trading, most people become obsessed with short-term results. They want instant gratification. They want green candles today and winning trades right now. If immediate success does not happen, they panic quickly. They switch strategies impulsively, or worse, they give up entirely on their trading goals. But traders who truly succeed are not chasing short-term wins at all. They focus on building something far more valuable than quick profits. This mindset leads us to our next critical rule. Think long-term, not short-term when building your trading career. Short-term profits might feel good temporarily, but they do not build sustainable careers. What builds real, long-lasting success is thinking with a long-term perspective. This means developing your skill set consistently. This means refining your strategy through continuous testing. This means slowly compounding your edge over months and years. Great traders never ask how much money they can make today. Instead, they ask how they can improve today so they can remain profitable for years to come. That mindset shift changes everything about your approach. It removes the pressure from every single trade and replaces stress with clear purpose. You stop gambling for quick wins and start growing systematically. Stop trying to win the entire race in one day. Trading success is a marathon, not a sprint. Think bigger than daily profits. Think longer than weekly gains. Think more sustainably than most traders ever consider. Now we arrive at one of the most critical truths in the entire world of trading. Risk management is everything when it comes to long-term survival and success. Let's be completely honest about something important. You cannot avoid losses in trading. Losses are simply part of this business model. What matters tremendously is how much you lose when trades go against you. Risk management keeps you in the trading game when nothing else seems to be working properly. It serves as your safety net. It represents the clear line between professional trading and broke gambling. Effective risk management starts with 3 fundamental principles. First, always use a stop loss on every single trade. Do not leave your positions open to unlimited risk. Know exactly where you will exit before you even enter any position. Second, manage your position size carefully and consistently. Do not bet large amounts on any single trade idea. Stay consistent and proportional relative to your total account size. Third, never risk more money than you can afford to lose completely. Your primary goal must be protecting your capital, not just growing it as quickly as possible. You do not have to win every trade to become profitable over time. You do have to make absolutely sure that your losses never wipe out your entire account. In trading, the #1 rule remains beautifully simple. Stay alive in the markets. The longer you survive, the more opportunities you get to apply your edge and profit from your skills. In trading, mistakes are not just common occurrences. They are absolutely guaranteed to happen. You will take wrong trades occasionally. You will exit profitable positions too early sometimes. You will ignore your stop-loss levels when emotions run high. Yes, you will definitely regret some decisions you make along this journey. What separates winning traders from everyone else is not that they avoid making mistakes. The difference is that they learn systematically from every mistake they make. This insight brings us to a game-changing principle that transforms failures into growth. Learn from every single mistake you make in your trading. Every loss, every misstep, every emotional decision holds tremendous value if you are willing to reflect honestly on what happened. Professional traders treat their mistakes like valuable gold. They write down what went wrong. They ask themselves why it happened. They look for repeating patterns, not in market charts, but in their own behavior. Was the mistake caused by fear, overconfidence, or impatience? The market will continue punishing the same mistakes until you identify and fix the underlying causes. If you ignore your errors, you will repeat them indefinitely. If you study them carefully, you will grow beyond them and become stronger. Create a detailed trading journal starting today. Log your entries, exits, reasons for taking trades, and emotions you felt during the process. Most importantly, review your journal regularly to identify patterns. Your journal will become like a mirror, showing you exactly where you need to improve your process. Now we reach one of the hardest truths for any trader to accept completely. Nothing in the market is ever certain, regardless of how things appear. This lesson may sound simple on the surface, but it takes considerable time to truly absorb at a deep level. No matter how perfect a setup appears on your charts, no matter how strong the technical signals, no matter what your indicators or gut feelings tell you, there always exists a real chance that the trade will not work out as expected. The market does not guarantee anything to you or anyone else participating. That is why experienced traders always plan for both possible outcomes before entering any position. They ask what happens if the trade goes right and what happens if it goes wrong. They never trade with hope as their primary strategy. They trade with thorough preparation for multiple scenarios. The sooner you stop expecting certainty from uncertain markets, the more mentally prepared you become for anything that happens. You will stop chasing perfect setups that do not exist. You will start focusing on managing risk instead. You will stop reacting emotionally to losses and start responding with calm professionalism. Accepting uncertainty is not weakness or lack of confidence. Accepting uncertainty represents maturity and wisdom. In trading, that mature mindset becomes your greatest competitive edge. When people start trading, they often dream of that one spectacular trade. They imagine a jackpot moment where everything goes perfectly and their account doubles overnight. It seems like an exciting possibility, but it also represents a dangerous way of thinking. Small, consistent wins prove far better than big, one-time gains that happen rarely. Big wins may give you a temporary rush of excitement, but they remain rare, unpredictable, and often get followed by equally large losses that wipe out all progress. Smart traders do not chase home run trades. They focus on base hits instead. They seek small, steady profits that add up significantly over time. They understand that trading is not about impressing anyone with spectacular results. Trading is about protecting capital and compounding it gradually through consistent execution. Think about this concept mathematically. If you make just 1% profit per week consistently, you can grow your account exponentially over time through the power of compounding. But that kind of growth only comes with patience, emotional control, and realistic expectations about what markets can provide. Consistent small wins also build genuine confidence because consistency does not depend on luck. Consistency depends on discipline and following proven processes. So instead of looking for the next explosive setup that might never come, look for trades where your edge appears strong, your risk is clearly defined, and your mindset remains clear and focused. Over time, those small wins will become your greatest source of strength and confidence. Now let's discuss a rule that every experienced trader lives by without exception. Trade with the trend, not against it, whenever possible. Have you ever looked at a chart and thought that a particular move has gone too far in one direction? Have you ever assumed that price has to reverse soon and placed a trade in the opposite direction? It seems tempting, but more often than not, that mindset leads directly to losses. The market can stay in a strong trend much longer than you expect or think is reasonable. Price does not turn around just because you think it should based on your analysis. That is why successful traders do not try to outsmart established trends. They align their trades with trend direction instead. If the market is moving higher, they look for buying opportunities at good price levels. If the market is moving lower, they look to sell at appropriate locations. They do not fight the natural flow of price action. They ride the current like experienced surfers. Trading against the trend resembles swimming upstream against a strong current. Even if you are strong and skilled, you will exhaust yourself fighting natural forces. But when you trade with the current, your edge improves dramatically and your setups become higher probability opportunities. Remember that the trend is not your enemy to be defeated. The trend serves as your guide to follow intelligently. When you respect trend direction, you move in rhythm with market forces instead of fighting against them. Trading involves much more than charts, patterns, or technical indicators. Trading is fundamentally about you as a person. How you think under pressure, how you feel during stressful moments, and how you react when things do not go according to plan. One of the biggest reasons traders fail has nothing to do with lack of strategy or market knowledge. Failure often comes from inability to control personal emotions during critical moments. This brings us to a rule that seems easy to understand but proves extremely hard to master consistently. Never trade based on emotions rather than logic. The moment you let fear, greed, or frustration take control of your decisions, you have already lost the battle for consistent profitability. Maybe you lost a trade and now feel angry, so you jump impulsively into a new position just to win back what you lost. That represents revenge trading. Maybe your last 3 trades were winners, so you become overconfident and suddenly start risking much more than usual. That represents greed taking control. Or maybe the market is moving quickly and you panic, entering without any plan. That represents fear driving your decisions. All of these scenarios involve emotional decision-making. Emotional decisions represent the enemy of consistency and long-term success. Great traders possess one crucial superpower. They follow their predetermined plans, not their current feelings. They treat trading like a professional job, never like entertainment or gambling. When their system signals an entry, they execute without hesitation. When their system signals an exit, they do not delay or hope for better outcomes. Their emotions might be screaming loudly, but their discipline stays in complete control. That kind of mental control takes time and practice to develop, but it forms the foundation of long-term trading success. Now, here is a rule that ensures your strategy represents more than just theory. It must be proven through testing. Always backtest your strategy thoroughly before risking real money. Before you risk your hard-earned capital, you need to ask one crucial question. Has this strategy actually worked in the past under various market conditions? Backtesting means taking your trading setup or rules and running them through historical market data to see how they would have performed over time. You are not guessing about potential results. You are gathering concrete evidence about your strategy's effectiveness. Did the setup win consistently over time? What was the average profit per trade? What were the maximum drawdowns you would have experienced? How often did the strategy fail during different market conditions? By conducting thorough backtesting, you build genuine confidence in your approach. You understand your edge clearly. You know its strengths and recognize its limitations. Without proper backtesting, you are just hoping your strategy works when real money is at risk. But with solid testing behind you, you make informed decisions based on evidence. That confidence helps you stay calm and focused even when individual trades do not go your way. Remember this important point. Do not trust any strategy until you have tested it thoroughly yourself. The past will not predict the future exactly, but it will prepare you for what is possible. There exists a common belief among beginners that you need a small fortune to start trading successfully. But the truth is quite different. You do not need a huge account to begin. You just need the right amount of capital to manage risk responsibly and survive inevitable losing streaks. Make sure you have enough capital to stay in the game long term. It does not matter how skilled you become, how great your strategy proves to be, or how perfect your setups appear. If you start with insufficient capital, every small loss will feel enormous. Every drawdown will shake your confidence badly. Every trade will carry too much psychological pressure. Eventually, one bad trade could wipe out your entire account. This happens not because your strategy was wrong, but because your account was too small to survive normal market volatility. That is why experienced traders do not just protect their capital. They respect it as their lifeline in this business. They understand the goal is not just growing the account quickly. The goal is preserving capital during tough times so you can profit during good times. Never risk money you cannot afford to lose completely. Never go all in on any single trade or day. Always maintain a buffer large enough to weather multiple losses without emotional damage. In trading, staying in the game represents half the battle for long-term success. Capital serves as your lifeline that keeps you connected to opportunities. Now let's discuss something more emotional and much more dangerous than undercapitalization. Fear of missing out, known as FOMO, represents a real and powerful force. If you have ever watched a candle skyrocket without you, you understand the feeling completely. Your heart starts racing. You feel like you missed the move of the day. So you jump in late without any plan, just so you do not feel left out of potential profits. But here lies the problem. Most FOMO trades end in regret because markets do not reward impulsive entries. Markets punish them consistently. Smart traders understand that opportunities never end in financial markets. The market will be here tomorrow, next week, and next year. There will always be another setup, another clean entry point, another chance to apply your edge profitably. So they wait patiently. They breathe deeply. They trust their system completely. They do not let the fear of missing one trade cost them 10 bad trades taken impulsively. If a big move happens without you, let it go completely. Your job is not to catch every wave in the ocean. Your job is to ride the waves that fit your strategy and risk management rules. In trading, patience pays dividends and discipline protects capital. These two qualities matter more than trying to catch every opportunity that appears. Let's face reality about how many people approach trading. Many treat it like a hobby or worse, like buying lottery tickets. They wake up, open their charts casually, throw on a few trades, and hope for the best possible outcomes. No structure, no record keeping, no review process. Just emotion and impulse guiding their decisions. But successful traders live by a completely different truth. Treat trading like a serious business, not a game or hobby. Every winning trader sees their trading desk as a business headquarters. Just like any successful business, trading needs careful planning, proven processes, and strict discipline. A successful business does not make random decisions based on gut feelings or emotions. It operates using data, proven strategies, and careful risk management principles. Ask yourself this important question. Would you run a restaurant without tracking your costs, reviewing performance regularly, or adjusting your menu based on customer feedback? Of course not. So why would you treat your trades any differently? Professional traders keep detailed records of everything. They review past trades systematically. They track performance metrics carefully. They analyze their mistakes honestly. They know their monthly targets, maximum drawdowns, win ratios, and risk per trade. They understand this. Represents a career, not a casino. If you approach trading like a serious business, the results will begin to reflect that seriousness over time. But if you treat it casually, the market will respond with losses that reflect your casual attitude. The market represents a living, dynamic environment that is always evolving and changing. Strategies that worked effectively last year may become less effective this year. New trends emerge constantly. Volatility shifts between different levels. Price patterns change over time. That is why great traders never stop learning and adapting to new conditions. Keep updating yourself with market knowledge on a regular basis. They study price behavior constantly. They test new ideas carefully. They read extensively, listen to different perspectives, observe market changes, and adapt their approach accordingly. Learning involves more than just technical updates about strategies. Great traders grow mentally and emotionally as well. They refine their emotional discipline continuously. They improve their patience over time. They enhance their ability to think clearly under pressure. In this game, stagnation proves dangerous to long-term success. You are either evolving and improving, or you are falling behind other participants. Take time every week to reflect on your performance. Learn something new about markets or yourself. Test different approaches carefully. Experiment with new ideas. Focus on continuous growth. In trading, knowledge is not just power. Knowledge provides protection against the unknown and unexpected. One of the biggest mistakes traders make has nothing to do with how they trade. The mistake involves who they choose to listen to for advice. In a world filled with social media tips, online gurus, signal services, and endless opinions, it becomes easy to get completely lost. Do not follow everyone's advice without careful consideration. Everyone in the market seems to have strong opinions. Buy this stock now. Sell that currency pair immediately. This asset will double in price. That chart pattern is breaking out perfectly. While some advice might prove helpful, most of it represents noise that distracts from your own analysis, especially when advice comes from people who do not understand your plan, your risk tolerance, or your personal goals. No one else bears responsibility for your money except you. So you must take complete ownership of every decision you make. Yes, learn from experienced mentors. Yes, study proven strategies. But never blindly follow anyone without thinking for yourself. Always ask these questions. Does this advice align with my trading system? Does this make sense based on my own analysis? Am I trading my plan or someone else's conviction? Great traders trust their own research above all else. They think independently. They remain open-minded but never easily swayed by others. In the end, trading is not about following other people. Trading is about mastering your own edge and executing it consistently. This brings us to one of the most powerful and most overlooked rules of all. Be patient with the entire process of becoming consistently profitable. Trading is definitely not a get-rich-quick scheme, despite what some advertisements might suggest. Most people enter trading hoping for fast money. They see screenshots of big profits on social media. They hear stories of someone doubling their account in a week, and they think that could be them too. But that mindset destroys more traders than bad strategies ever will. Trading represents a skill that requires development over time. Just like playing a musical instrument or mastering any sport, trading takes time, discipline, and consistent practice. There will be slow months ahead. There will be losing streaks that test your resolve. There will be times when nothing seems to work properly. But if you stay consistent, if you learn from your losses, if you focus on growth rather than greed, the results will come eventually. You will not get rich overnight, but you can build wealth steadily over time through patient execution. So breathe deeply. Slow down your expectations. Stop rushing the natural process of skill development. The traders who win big over the long term are usually the ones who wait patiently for the right opportunities. Throughout this journey, we have discussed strategies, risk management, discipline, mindset, and patience. Now we arrive at two of the most deeply personal lessons. These insights do not just change how you trade, they change how you experience your entire trading journey. Most traders spend years trying to understand market behavior. They chase indicators, patterns, news events, and setups constantly. But the ones who truly succeed turn the lens inward first. They learn to understand their own minds before trying to understand market movements. Their impulses, their fears, their habits, and their strengths all become subjects of study. The market is not your biggest opponent in this business. You represent your own biggest challenge. When you feel greedy, you overtrade and take unnecessary risks. When you feel afraid, you hesitate or exit profitable trades too early. When you lack confidence, you jump from system to system, never giving anything enough time to work properly. The real breakthroughs happen not when you learn a new strategy, but when you learn more about yourself and how you react under pressure. Start observing your own behavior like you study chart patterns. Ask yourself, when do I trade best? When do I lose control? What patterns repeat in my own decision-making? Self-awareness represents the ultimate edge in this business. Finally, we arrive at the most freeing lesson of all. Learn to love the process, not just the profits. If you treat trading like a chore, something stressful, exhausting, or fear-driven, you will not last long in this business. This journey contains many ups and downs. If you cannot enjoy the process of learning and growing, you will burn out long before you achieve consistent success. The best traders genuinely love the game they play. They find joy in learning new concepts. They enjoy analyzing price action. They love watching markets dance and move. They celebrate their growth more than their gains. Yes, they take trading seriously, but not so seriously that it becomes a burden. They understand that trading involves more than just making money. Trading is about mastery. It is about becoming a sharper thinker, a calmer decision-maker, and a more disciplined human being. So relax and smile more often. Let go of the pressure to be perfect every day. Just enjoy the journey of improvement. When you truly enjoy trading, you do not chase success desperately. You attract it naturally through your positive energy and patient approach. These 25 lessons represent the foundation of trading success. They come from real experience, tested in actual market conditions. If you apply them consistently, they will transform not just your trading results, but your entire approach to making decisions under uncertainty. Remember that it is not just about beating the market. Success is about becoming the kind of person who can handle whatever the market presents with calm confidence and disciplined execution.